Welcome to you, Adam. How are you?
Hi, Dale. Thanks for the great introduction there.
It's great to have you, buddy. So I know you wanted to, let me put my screen up, cover what's happening in Euro Yen, and Blake just showed it. So sorry.
Yeah, well, I mean, it's spilling over, right? It's pop,
Yeah.
giving the euro a bit of a pop. You're right across the board, sterling as well. I think this just speaks to the opportunities in FX right now. Gigantic move in yields yesterday.
Yeah.
FX market pretty much slept on it. I mean, Japan was out for a holiday. Maybe that was it. But the classic move on that should be yen weakness. A little bit of it yesterday. And then today the market wakes up, or Japan comes back to work, and the yen gets trounced. And it was just sitting there. It was just low-hanging fruit waiting to be picked. And I mean, we've been watching these moves, everyone has, for a while now. And I think it just speaks to emphasizing the magnitude of these moves in yields, and that nothing's really stopping it. I mean, if you can pull up any rates chart, and there's really, now that we've blown through some of these levels, there's just not anything standing in the way of really 3% there. You've got the 10-year up, and it's the same right across the board. Yesterday in 10s, we blew through the 2021 high, 30s, the 2021 high, and it's a setup really nice. I mean, it's tough to
like a breakaway gap here that we had Monday.
Yeah,
it actually is. I didn't notice that till now. So, it's not just a continuation move. It's a, kind of a breakaway gap. So, yeah, I surprised me, Adam. I'll be, I was thinking that we were putting in some type of peak, but I don't know where the peak would be now. I just saw a flash. Mark Newton thinks yields are peaking, but I guess.
Well, the one thing, I mean, you do start to see some people getting really bearish bonds, which obviously be watched for 30 years right now, and that's been the wrong trade so many times.
Yeah.
But inflation is real. Yeah. And the one thing I do worry about is the calendar, right? This is Japanese year end.
Right
at the end of the month. And if you go back, I don't know. Yeah. If you have 30s there, you can see, you just kind of got back off of it, but
okay. You want TLT? All right.
Yeah. That low last year, you see in TLT, the one we just broke yesterday, look at the date on that.
Okay. March of 21.
Again, that's that sort of year end.
Yeah.
In Japan kind of move. So, I'm thinking about it, but that's really the only caveat I can put on the trade right now. I think the market's coming around to 50 basis points from the Fed. I'm looking at the probability now up to 72%. It was 52 yesterday morning, and come out 65 after Powell spoke. And then we added another 2 basis points today. I don't know if that's what Goldman Sachs is calling for 50. So maybe the market's tuned into that.
So Adam, let me ask you, do you look, have you seen it too? Came in here, talks about fiscal year end in Japan, and that, sometimes could put in a seasonal low for the yen. And what are we, about a week away from fiscal year end?
That's it.
Have you seen that before, that pattern?
That's it. And I'll pull up some numbers here, sort of while we're talking, and look at the yen in April. I mean, the problem is April is a really strong seasonal month for stocks. So I'd struggle to imagine there's that much strength in the yen at the same time. But, I don't have the numbers right in front of me here. I'm just clicking away to get them up.
So, all right, you brought them up. The $1 trillion question is in the S&Ps, was this enough for an intermediate term low? And will the market have enough juice in the face of higher rates and geo stuff and inflation to make a new high, or should we be looking for some type of failing rally here in the S&Ps?
Yesterday was impressive, right, Dale?
It was.
And you sort of look for these signs. 3-4 days in a row, 1% gains in the S&P 500, pretty impressive. And we started out last week with some rough news on China COVID. Oil bounced back here again. And then yesterday, yields moving up 15 basis points, almost 20 basis points.
Yeah.
And, stocks finished flat. And they had kind of, there was a time a few months ago, if you had yields up 15 basis points, you were down 3% in NASDAQ. Easy.
Great point.
And we were able to shake that off. So again, I'm watching the calendar, but if you remember kind of this time 2 years ago, everybody was watching the calendar as well. And it was just right around 2020, the COVID lows. We're kind of coming in March and everyone's saying, well, there's going to be some rebalancing because of, I can't even remember the exact date, but it might have
March
even been
30th. Oh yeah, 23rd. Again, on the solstice. I mean, I mean the spring equinox, I believe it is. So a lot of stuff happens around there. You brought up this March date everywhere.
It is. It's in that, we looked at last year and the year before. Those are two sort of, it wasn't exactly pivotal in long bonds, but I think there's a trap to looking at the calendar too much and sort of dismissing a move where everything's telling you, this is breaking out. I heard Blake talking before I came on about these moves in yen, breaking patterns back to 1990. There's been a lot of March 30th since 1990. Yeah. And, it all looks pretty good. So, I think you just have to go with these moves. The one thing it sort of defy reason is that Japan isn't having a little bit more inflation. Now, I see the numbers and it's not inflationary, but if you have the yen continuing to weaken, commodity prices continuing to rise, I mean, at some point, maybe Japan gets in the game towards hiking, and then you got to look out for that. But I think the trade is just to stay short the yen until then. So long yen crosses until Kuroda comes out or somebody says, listen, we've got to tighten up on policy. And obviously that spark a bit of a reversal, but I mean, that's months away. It's barely a risk on the radar right now.
So I really haven't talked to you, Adam, since the war began, and we had this war spike, and you've been, very bullish energy for a long time. So we had this break last week and we're recovering. Do you think we're going to just blow to new highs, or is this too, like the S&Ps, we're talking about the same topic? Does crude blow off to new highs, or is this a failing rally here in crude?
I mean, the EU is talking about cutting off its nose to spite its face today, cutting off your Russian oil. And I guess what I'm looking at, we're on the contract roll here right now. So it looks like you got the second contract up on that. So that's nice. Just this last leg down, you probably flip to a daily chart. We're right around that 50% retracements, those Fibonacci numbers, sort of on this 30 down to 95 kind of level. I think it comes in around 112, maybe 116 at the 62.8. So we can get up above that 116, then to new highs. I don't like to see these moves going so quickly. I like buying oil at 95. We'd rather to see this move up to 110 unfold over 2 or 3 weeks rather than this really, really quick pop right back.
That makes it kind of has the feel of a bear market rally when it comes back too fast. Is that what you're saying here?
Yeah, exactly. And it kind of stalled right at this 50%. I mean, I think the bigger trend is if you just sort of run it from the bottom, right around that trend line, that 50-day you have on there. That gives a kind of good idea of where the support really is. And buying at 110, you're looking at some pretty good two-way risks right now.
It's a tough call.
On the fundamental side, though, that it's tight. It's tight. Yeah. I've seen these numbers coming out about U.S. production. It's not going to happen. The 13 million barrels a day, and even I think another one was Saudis on the weekend. I think that's why it popped yesterday. So they come out. Saudi Arabia has been saying we have 2 million barrels of excess capacity sitting around, blah blah blah, and they say this forever, but they've never been able to produce more than 10.5 million barrels a day consistently, ever. For more than a few months. And they're at 10.2 right now. And they say they have all this spare capacity. Then they come out on the weekend and say we're going to invest billions of dollars to get to 13 million by 2027.
Yeah.
So now it's going to take you 5 years to get the 2 million barrels that you said you already had. So maybe you don't have any spare capacity here. Maybe 10.5 really is the limit of what you have. And maybe even less because everybody's underinvested.
Maybe they don't want to pump.
Well, that bluff, I think, keeps Americans from investing and the rest of the world from investing because they think, well, listen, if we turn on, I'm not going to go out and spend $5 billion and bring a huge offshore facility online just to have Saudi Arabia come and flood the market with their 2 million barrels. So,
Yeah.
Maybe OPEC doesn't have the capacity, and we still have about 2 million barrels per day of aviation fuel that hasn't come back. That's going to come back this summer, or if not later. And so and then they're talking about Russia hasn't been able to export 2 million barrels a day. And that's really, will they find markets for that? Will they be able to get it out? So, could we be at $200 a barrel?
Yeah.
And I look at oil companies right now because they're discounting. They're still discounting like 70, 80 bucks. So I think that's where the torque is in that trade.
Why are they doing that?
I think it's a long-term problem. ESG killed them.
Okay.
Number two, I think a lot of people thought we were all going to buy Teslas and build a few windmills and we're not going to need oil anymore. And I think, the people in charge of a lot of money right now are all in Microsoft, Apple, Facebook, Google, and they didn't even look at oil. And I don't think there was a lot of critical thought put in. Well, the energy transition is happening. They thought, I want to, go where the ball's going, go to where the puck is going, as Gretzky said. And so so the ESG headwinds, the belief that oil was going to end. And I think now there's a second hard look at how much energy we're going to need, where we're going to get it from, and what it should be priced at. Because the multiples in those stocks, they're trading at like, 3 or 4 times earnings, a lot of them. And so we're going to need oil for more than 3 or 4 years. And even in a declining demand environment, which I don't think we're into, crude, I think we've talked about before, runs off at about 5% a year. So the mature fields, they just die off at about 5% of global oil a year. So that's about 5 million barrels a year. And you need to reinvest constantly just to keep oil production at that level. And we're just not spending. So I think it'll be a material shortfall in oil for a long time, and all commodities. And I think Russia, though, and that's
the
security
everything
question,
shortage. Yeah.
It's going to change the multiples on a lot of these stocks, and they'll just re-rate on that. And it's good for commodity currencies, right? Yeah. I think today's kind of instructive in AUD and the Canadian dollar and the Kiwi dollar. They're really popping. Stock futures not really up much. Commodities.
This looks ready for a breakdown here, Adam. I was thinking, gosh, if Canada can't rally with, and we're not that far off the highs in the dollar, what is wrong, with this picture that it couldn't even pop above 129 and looks like we're going to challenge lows? Do you feel that way?
I do. And I think that conviction is growing here. I mean, $110 oil, a lot of resources. Canadians flush. We ended the mask mandates yesterday here. I think you're going to see Canadian retail sales surprise. Trade balance, Canada is going to be at least a 14-year high this year. And the monthly numbers are coming in very strong, and they'll be stronger going forward with commodities where they are. Even we talked about lumber before.
Yeah.
There's so many. Steel. I mean, it's not really a Canadian thing, but every commodity out there is really cooking, and I think that investment's going to come, and a lot of it ends up in Canada. And so the one risk is Canadian housing it's going to pop at some point, but I think you just have to be mindful of that, because I don't know if it's just going to top and flatten out or pop.
Are you selling and going to rent for 2 years and then buy your house back?
I looked at buying a house yesterday. Huh? I looked at a house to buy yesterday, a new one, and it's out of control here.
Yeah, everywhere.
Oh, everywhere, yeah.
But everywhere. I think Grantham says, Grantham, right?
Yes,
he's predicting this big crash, and he's saying, stocks and global real estate is, his bubble pop bonds. So real estate everywhere. People are there's a commercial, a company called Redfin, Adam, and it shows like a real estate office, as people sit at their desks, but they made it look like a trading floor, Redfin. Okay. And there's a tape going across, and there's a woman goes, oh, there's one that just came on the market, and she has a model house, not this, and puts it up on a shelf. And this one lady says, oh, I got to have it. And she goes up to it and wraps her legs around the model house. I said, that's got to be the top.
That's
That people, you know what I mean? It's like the QQQ commercials where strange people just pop into a commercial. No, I don't play. I'm an investor in QQQ. So, do you think that what we have happening here in the dollar is a topping pattern as well, or is there one more hurrah left? You know,
I mean,
dollar didn't really improve with Paul's testimony yesterday,
yeah, I
speech.
mean, the problem for me is the euro. And I know it's popping a little bit today, and we talked about euro yen, and maybe that could run. But
Yeah.
everything looks so bleak to me in Europe.
Okay.
You know, if you have an inflation problem, you know, on day one, then on day two in Europe, you have a sovereign debt problem because the budgets are way out of whack. You know, and you know, the energy costs in Europe are devastating for industry. Unemployment in the periphery is problematic. You know, I just the amount of, and you know, you look at European stocks a little bit cheaper, so some of the investment flows go there. But you know, bonds not getting paid that much to be there rather than in the U.S. That spread will grow. The ECB unnecessarily dovish. You know, this war in Ukraine is bad for business, and you know, so that on that side of the dollar, yes, but Aussie, CAD, you know, sterling is kind of interesting, but it's been such a torque trade to the risk trade. It's unbelievable. It's like the old, almost like the old euro yen trade is now cable.
Interesting. And also, so I would say with your viewpoint on the euro that you think this euro pound is going to probably make a new low.
Really, I just can't get behind the euro. And I don't know how anyone could maintain the kind of conviction in the euro that you would need to be long for any amount of time.
Okay.
I just can't see the numbers coming in Europe being anything to get excited about.
And we had huge moves in gold both ways, like crude. Tough call there. What do you think?
Listen, if you're not a friendly country with the United States, and there's quite a few of them out there that have a fair amount of money, I don't see how you can still hold money in treasuries or US dollars. I mean, Russia has had how many billions seized, essentially frozen? I don't understand. If China's thinking about invading Taiwan, I don't understand how they can keep as many treasuries as they have.
Yeah, so that was, you know, weaponizing SWIFT has made the whole world want to speed up de-dollarization, don't you think?
Well, that part of the world that's not friendly with the United States, that's for sure. And what would you be buying? I know they're trying to cut off Russian gold, but you can't. It doesn't really work. It's such an easy thing to move and sell. So that to me is I believe that, you know, these things happen slowly, right? So you're not going to see it in the price action, but I think, you know, we've topped out. It obviously ran into that and made a bit of a double top here. And when we'll see if that holds. I would note, you did note the euro. April is the second best month for the euro in the last 20 years. So
interesting.
Some scope for a little bit more of and you probably see that read through on the Dixie. Yeah, worst month. April's the worst month for the US dollar. And again, that's probably that risk trade.
It seems like the market likes a weak dollar again. It did okay with a strong dollar, and now it seems to prefer dollar weakness like the old days, risk on with the weak dollar.
With the weak dollar. And I think there's a bit of a little of that point. If you look at the stocks in April, only 4 times in the last 20 years has the S&P 500 been lower. And by far the best month, April and November in the S&P 500 of the last couple decades.
Well, it's sure set up to, you know, if it's if you believe this formation,
what's your Japanese or Chinese stocks as well? What's your read on sentiment out there right now?
That was a bullish argument for buying stocks down here. I couldn't think it certainly wasn't a Fed put. It wasn't inflation is transitory. It was that no one liked them.
Yeah, that's
it. I mean, really, it was a sentiment. I mean, it was just a sentiment play. You know, a lot. Yeah, you saw 10 on DSI and S&Ps.
I'm almost
Uh,
finding that's really the best trade out there now is sentiment. I mean, everybody's on Twitter and you get such a
Yeah.
good read on sentiment from so many people, and you get these extremes, and they're almost the strongest signals that are out there. You can line it up with some of the fundamentals and technicals, but
Yeah, and you
generally the
got that.
sentiment, you kind of have
Yeah.
to go against some of that.
Yeah, and that happened with the dollar too. Dollar peaked, in the 90s, DSI, and still hasn't made new highs. So you're right. You got to pay attention to sentiment and how people, if they're offside. So I mean, this was such a intense short squeeze that I bet their eyeballs were popping out.
It really. And look at this. It's like a low. The low didn't make new lows there.
Yeah.
I read something about 1% rallies in a row.
Yeah.
It teed off a lot of really strong rallies. And then, sorry, just rounding out some of the seasonals. Oil, very strong April through June.
Okay.
So, I mean, oil's got that going for it as well, which is crazy on top of everything else.
Great look ahead on some seasonals.
Yeah, and it's early. I like, we should be a little more early on this season. Sometimes it's better not to wait till the first of the month.
Get people mentally prepped, and then they start, monitoring things and looking for triggers to go with that.
Yeah, waiting for something to go against it. Yeah, dollar, strong, very strong month for the Canadian dollar as well, which was kind of teeing up on a lot of fronts.
Okay, copper.
Yeah, I mean, and then I see the risks out there. China COVID it's a real risk, and I'm shocked that it didn't reverberate really more than Monday. China came out and said, we're going to have some stimulus. We're going to ease some curbs on business. And the market loved that. I mean, you saw those moves in China, like what's KWEB up 40% from the bottom?
Yeah.
That's unbelievable.
Moves. Most moves,
I mean, those are
both ways.
This is shockingly large moves. But, if you ease curbs to keep business open, I mean, the curbs are there for a reason to keep COVID out. And, with Shanghai, I saw yesterday 24 cases, which is, I think, a record, but also 724 asymptomatic cases, they said. Now, what is that ratio to me seems a little out of whack.
Yeah.
I don't know COVID expert, but I mean, there's got to be more than 1 in 14 people who get COVID who have symptoms.
Yeah. And I guess there's a wave happening in Great Britain right now.
Yeah, that's all. I'm not so worried about that because I think the rest of the world's learned to live with it.
Right.
But China will shut it down again. And these supply chain problems are annoying. And you can't even analyze it, right?
Yeah, you can't. I was wondering if no one's talking about it, but we paid Russia's interest payment to the IMF. Are you worried that there could be a Russian default? Because last time around, it was long-term capitals that got caught up in it.
Right.
Do you think that that's looming and kind of like a Damocles sword hanging over the financial markets?
Who I saw there was like Melvin Capital or someone. Somebody who's already been beat up had a position in Russian stocks too. Like it was a pretty good one. Or anyway, BlackRock I think has some stuff there. The companies themselves will have to take write-downs too. I mean, it sounds like they basically nationalized like 800 McDonald's there.
Yeah.
And how do you value those if you're McDonald's right now? And all these other companies that are just walking away, oil companies, anybody who's doing business there, it's basically got a market to zero.
So if they default on their debt to the IMF, are there
I'm not so, because the Russian debt burden isn't really high.
Okay.
And I'm not really worried about that angle at all. And I think the financial risks, maybe it pops up, maybe I'm wrong about that, but I'm not worrying about it now. I'm ignoring the Russia because they have the money to pay all this. They're just not allowed to.
Yeah.
So that's
and
go ahead.
Yeah.
Coming in today, we're watching the Fed, right? Rising odds of a 50. I think Canada is going to be the first to go on 50. And I think that's April 4th, if I'm not mistaken, was the day, maybe April 15th. Anyway, the next Bank of Canada meeting. That's going to kick it off. And I'm worried about how the market's going to react with all this 50. But, the talk yesterday didn't hit the market too hard. So And you can get to the argument where you say, you know what, maybe if the Fed does hike sooner, the terminal rate ends up being lower. Because right now you're pricing in something like a 2.25% terminal rate for Fed funds. Similar for, maybe Canada, anyone else who's really hiking, Australia. Is that so bad? Is that so bad for business, for the economy, for housing? We're talking about housing. Well, it's tough in a rising interest rate environment. Well, all those hikes are priced in now.
Yeah.
So
interesting.
Maybe this, I just think it cooks. I'm so bullish on U.S. housing, Dale, and I think the narrative goes against that, but I think those hikes are priced in now. It's what, 3.5% now for 30-year fixed.
Yeah, almost 4.
Almost 4. And I should probably go up again next week because these moves, but I think that's
how the world has changed in 3 months. Isn't that amazing?
Yeah.
It feels like it, we've been in this soup or whatever, this environment for a while, but it's only been 3 months. We would not have had this conversation at the end of last year.
And then on the downside, people talk about recession, right? Commodity induced recession. The things that are going to happen in the developed world are going to be awful a year from now, food crisis, everything else. But for the developed world, the reaction function from governments now, if we start to see a rough patch, will be to spend more money.
Yeah.
And so I don't think you're going to get any sort of meaningful slowdown. Like a slowdown, yes, but an outright recession is almost bullish because you'd get more government spending. Now, I'm not sure Europe has the capacity to do that because of the fiscal rules in the Eurozone, but I don't know, maybe they continue to waive those. And I think that's an important decision coming up. They have to decide on 2023 budget rules soon. And Germany, naturally, is saying we got to go back to the old rules about deficits, the ones that they, fought Italy for how many years. And if they decide to go back to that, you got to get away from Europe because that's some pretty insane tightening fiscally.
Okay. Yeah, very wide ranging like usual with you today.
But I don't know if I made a clear point, but I like to add here. I hate to be to home.
Commodity currencies, man.
Look good today. Good today.
Really appreciate you coming in and informing us with what to look ahead at. You brought up some April points and bullish for stocks and bearish for the dollar. That's worth its weight in gold at 1927.61.
Well,
at least an ounce of gold you dropped here.
I like crypto too. I think crypto's probably set up pretty nicely here now. It's weathered a bit of the storm. So.
And have you had your wife had your 3rd child, buddy?
4th, Dale.
4th. Oh my, I can't keep up with
thank you very much for remembering. On the 1st of the month. First of the month.
Congratulations.
So just getting a solid 10 hours of sleep a night here.
And what a difference from the bachelor in Panama to the father of 4.
I remind my wife. Wife sometimes I could be there in that 27th floor overlooking the Pacific Ocean.
You do,
but spring has come. Spring has come to Canada finally.
Well, you know what? They're your best long-term positions you've ever taken. And,
thanks,
so I'm so happy for you, Adam, and really appreciate your giving spirit and always being ready to share your views at a moment's notice for us. And really, thank you, my trading warrior brother.
Also glad to be on. Have a wonderful week.
Okay, Adam Button, and follow him at Forex Live. They do great work there, and if you're not aware of it, his individual Twitter handle is at FX_Button. One of the best news traders and overall jigsaw puzzle traders I know. So again, thank you, Adam, and thank you, everybody. And you could join the team in 14 minutes for the morning edge. Don't just count your pips, count your blessings. Have a great session. Thanks again, Adam.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.